it going?
Hey, D Cruz, how's it going?
Just hanging out, just hanging out, just
All right.
really
Well,
just probably gonna do this mind over matter, then probably post the
probably
charts for the day.
be
But
probably be done, right? Nice, nice.
yeah.
Well, mind over matter. Wednesdays typically at noon, but I was on a phone call and it actually lasted 45 minutes into the that session. So apologies for having to run this a little bit later. So thank you
Oh, no
for
worries.
being flexible. So
Oh
awesome.
yeah. Yeah.
All right. Well, my thought was to talk about losses. I've actually had a series of bad days. So I had two losing days Monday, Tuesday, and then I had a winning day on Friday, and then Wednesday, Thursday last week. So 4 out of 6 days I've actually marked losses, which is very atypical for me, extremely atypical. And it happens,
Yeah, but it
although,
definitely happens. So
yeah, it definitely happens. And what I wanted to talk about
and it's
was,
probably gonna happen again,
oh, it's going to
and
happen
it might
again.
happen like 10 to
Yeah.
hundreds of times, depending on how long we trade. But hey,
And
it's
it's
how we bounce back,
And
right?
it's one of the ways that we actually make sure that we're keeping ourselves in check as far as what we're doing.
Exactly.
And a reminder of this is why we don't oversize. So yes, win rate at 70%. I trade very well, you trade very well, but we do take our losses. And if you're not oversized, it's a lot easier to keep the emotions out, a lot easier. And that goes back to all of the concepts that we always talk about is it's not for the winning days that you don't oversize, it's for the losing days so that you still have kept your powder dry so that you can actually trade once the moves happen when you're seeing the market more clearly. And so I'm going to hand it over to you just a little bit because you also had a day yesterday that was a little, not what you were after, and let you talk about that a little bit, and then I'll chime in as well.
Yeah, sure. So, shoot, I was just gonna say something that kind of just went back to what you said. Just kind of slipped my thought, but um, with sizing, yes. So I always see on winning trades, oh, I should have bought more. Like, oh, I should have bought more. Why didn't I buy more? Do you ask yourself the same thing? Do you ask yourself the same thing on a losing trade? Like, oh, I should have bought more? No.
Right.
So if that's, I think that's how you really tell if your sizing is correct. Of course, on a winning trade, you form a little bias, like, oh, I didn't size high, like heavy enough. Ask yourself that same question if you size the same you size same on a losing trade and it goes against you, right? And then that's where when you really realize like, okay, well, that one loss, it's going to take me another, another couple trades, right? Just to make back, if anything, if you will, just so you don't really want it
If
to
you were
be.
oversized, exactly.
Yes, exactly. What you want to do is just keep everything pretty much salvageable, right? So like you have one loss, it only takes a couple of trades to maybe even, you know, maybe two trades to get that back. And I think that's a proper risk management. Like, it just keeps us on our toes too, because we know we're not going to win every single trade. So we can't really attack at each trade like that, like, oh, we're going to win this, we're going to win this. That's whenever you get too confident, you oversize, and that's whenever bad things starts happening. But yeah, and then whenever you do lose, I think it is really important to have that like a strict rule in place whenever you actually, just you can tell yourself, all right, three losses, I'm done, and you really stick to that because if once you actually do have a nice routine and strategy down, you're gonna realize like, okay, that's just one bad day. I'm gonna make it back up, and uh, like I'll make it back up the next day, right? And you could just keep on just basically growing off of that, if you will, and just kind of just keep a level head. Yeah, whenever, I mean, losses are a part of the game. They do happen, and like I said, they're going to happen again in the future. And it's just preventing an oversized loss. Because I mean, you can handle a loss if you're sized correctly. You're going to, and it's going to happen. So as long as you accept that and you have that in the back of your head, then you'll be better off.
And losses are, we say part of the game, although Cruz and I do not treat trading like gambling by any means. It's just a phrase that is, I guess, everywhere. But think about it as a cost of doing business. That doesn't mean that you want to, like you have to have losses, but you will have losses. So if you're running a restaurant, you'd have to make sure you've got lettuce to make salads or steaks to make your fillets with. And you have to have that on hand. And sometimes you ordered too much and then you had to make it into a special the next morning into something else, right? I have special steak tacos for lunch today because you had a little too much. If you take it out of the context of trading into the context of another type of business, you're not always going to be spot on, and it is what it is. And you can't be upset if some of the lettuce wilted, or if you weren't able to sell some of it and you had to redo something else. So the idea behind the sizing is you don't have to be oversized to be extremely profitable, because what we're trying to do is take those base hits. We're trying to take those, from an options perspective, 10, 15, 20, 30%. And sometimes you have a home run of a couple 100% or 70% or 1,000% sometimes. But if you're managing right, those base hits are just stacking up. I mean, they're stacking up so nicely that when you take a drawdown of 30, 35%, or whatever you've chosen, maybe it's size smaller and you take to put a 50% stop on it, then you're not wrecked because you've got all those base hits stacked up behind it and the occasional home run, as opposed to your home runs or losses. And that's where we sized into it. Somebody had posted, I can't remember who it was, but somebody asked, both of us tagged us earlier in Market Talk, asking about the martingale strategy. And I wasn't sure if you saw that because I think you were out when it was posted. But a martingale it's a poker term that basically means you double down after a loss. And my answer was categorically not. You absolutely do not, because you're already potentially not in the right mind space because you've already taken a drawdown. So are you seeing things clearly? It somewhat depends on, how long you've been trading and how well you bounce back for things, what the position sizing was. If you were,
I vote no on
let's
that.
say
Yeah.
1%, if you were in a trade that was 1% and you lost it, would I then go to 2% because that doesn't violate my 5% position sizing? Probably. If I'm in my max 5% position size and I take a loss, I absolutely never, ever go in with 10% to try to make it back.
I feel like that's almost revenge trading at a point.
Yeah,
And
it
there's
is.
days where you're going to see things well, and there's days where you're not going to see things well. Like just plain and simple, you may have a bet, you could have had a better timed entry, and you may not have been a little patient. But like days like yesterday where I took three in a row, that rule would have killed me.
Yeah.
Like, oh, let's double down. Oh, let's double down. Then all of a sudden I'm 6 losses instead of just 3 losses down. So I
Right,
totally
because when
disagree
you
with
add
that.
to something like
Keep
that,
a
you don't get to
constant
count it
sizing.
as
And
one
I
trade.
mean,
It's more trades. Oh my gosh, yeah.
yeah, I mean, on a like down maybe the next day when you're seeing everything clear, you're having it's a nice trend day. Sure, maybe size up one time. If you really want to, just go back and oh, this is for my loss. Like I don't even think that's necessary.
I
I
think
think it's just
that's
oh,
when
you
it
take a
really goes
loss,
against
just
you.
keep it.
Is has been my experience. That's when you just get
Yeah. Oh,
clapped.
when it
Yeah.
rains, it pours
Hmm.
sometimes. I mean, especially with losses, and then you're just like, all right. And that's why there's that 3 loss rule that got developed over time. I
Yeah.
was sick of it really does it does really pour when it starts raining sometimes, you guys. So you really gotta avoid that. You gotta respect that you're not seeing things right, and go do something else with the day. Seriously, before you dig your hole deeper, then you're really kicking yourself.
Yep. So always thinking about how much you can lose, not how much you can gain. That's a key point. And there's always another trade. You guys hear us say that probably every week, probably daily on voice. There's always another trade. So what the perspective is that we really have to be focused on the fact that it's not a limited supply kind of environment. Now, setups, your A plus setups are limited. You might see them 2 or 3, sometimes 4 times in the day with the market, the way the markets have been lately. But if you're chasing something, trying to make something back, it's that that like scrambling gotta have this kind of sensation, hole in the pit of your stomach feeling. I can't believe I lost that. It is time for you to close your screens. And I see it quite a bit where I talk about what my position sizing is in relation to the growth accounts that I trade. And I'll talk with somebody on DM and they'll say, hey, I'm really struggling with this. There's been a couple days of losses and I'm pretty frustrated. And I'm like, well, tell me what you're trading, what your sizing is. Let's get a feel for what that is. Because, well, I'm not happy with my execution over the last week. I'll be fine. I had my largest profit year of all time last year. A little bit of a slow start coming into 2024. Excuse me. But it doesn't change anything. I'll still trade the way I trade. I just go, all right, I'm going to step back. So I have 2 in a row. I'll step out. I'm going to take myself a 30 minute timeout, go walk around, get outside. And I think it's important that most people, and maybe I should just say everybody, after you have exited a trade, whether it's a win or a loss, that you make it a very solid habit to get up, get away from your desk, even if it's for 30 seconds. You will be very surprised how much better you feel, how much more clear you feel. They're just that little turn away from the screens, because we kind of get that paralysis analysis where we're just stuck to everything. And so if you can just turn away and be like, okay, I'm going to go walk around the house one time. So if you're like, I think this move is still going to happen and you need to get back to it very quickly, you'll still be probably very well served by stepping away. And if the move happened in that minute or 2 minutes or 5 minutes that you took as sanity time out, you probably weren't going to catch it anyway, to be honest, right? I mean, that's really how that works out. If they pop that fast, like what's happening right now to new high on the day, there's not a way to catch this here. So stepping away doesn't hurt anything. And that was one of the hardest things for me to learn, because I was like glued. I would not leave the screens alone, and it was really damaging. So now that I'm in February, I'll have been trading 22 years from the time I first started trading QQQ options. And I could handle about an hour, maybe 75 minutes of eyes on the chart. And I was 26 at the time, so not super young. And I would just start not making good decisions. And it wasn't that I could say, I'm fatigued by this, but I started to notice the pattern of that's when you start to make mistakes, is you haven't had a break from the screens. And so now, after this many years of being in front of screens, that doesn't happen to me for like 4 or 5 hours where I'm like, okay, I should probably all right, bathroom break, gonna get up and stretch, whatever. And I try to time those where I'm going to get up and stretch. I'm going to, go fill up my water. So I keep a smaller water bottle. So I have to go fill it. So I'm getting up from the desk just a little bit here and there, because I don't want to be completely chained to my desk. Because that has happened to me in the past. And I don't know that I've talked to very many people that don't get some type of screen fatigue. You will probably get better at it depending on your personality the longer that you trade, as long as you can figure out how to stay in the game and still have capital to be able to deploy in your trading business, because you didn't overtrade, you didn't push it. So if I've taken 2 losses in the day and I put myself on a 30-minute timeout, then I'll come back and it will be all right, this next trade, if you take it and it's a loss, you're done for the day. And I don't care if that's at 10:30 in the morning. So might have tried to trade too early at the open, got myself chopped up, step away, come back. I have to make sure I'm re-clarifying to myself, and it's a commitment to myself, that I'm going to pay attention to what my A+ setups are, my trade setups that I know work almost all the time, because there's nothing that works all the time. But is my trade location going to be good? Because maybe I don't want to be done trading for that day. And most of the time, that will be a winning trade for me, because I'm like, all right, refocused, all right, got my mind in the game, and turned out to be a decent day. Monday was not one of those. My third trade was a loss. It was about midday. And I'm like, uncle, okay, I'm going to call it. And there was no benefit for me continuing to trade, because I obviously wasn't seeing the market well, even with that break. So the idea is to allow yourself to have that space to be able to within what your personality is, manage what the stress levels are that's being created by losses. And if there is a lot of stress, there shouldn't be a lot of stress. We'll start with that. That means that you very likely have violated rules, you're oversized, you're trading with capital that is not risk capital, it's not money that you can afford to just lose all of it and be fine. So you should not be trading with all of the money or the last money that you have available. Because if
And
you
just
are,
to add on that, I do agree with also whenever you're starting to build your accounts, you also want to start trying to pay yourself off, pay that account off, and make it risk free. I know that it's,
yes,
just we get in like especially the first, like, 1 to, I would say, about 3 and 4 years,
yep,
you're gonna kind of be rolling and kind of like a almost, it's gonna feel like a circle almost. You're gonna be profitable. There's gonna be days where you are, and then it's gonna be weeks that you are, and then
large
months that
swings.
you're profitable, and then you're not profitable, and it's profitable, and then it's just like a constant wheel. And then it's really easier to let emotions get the best of you and just kind of almost give up in a trade almost, and just kind of let it roll, and just almost like, and if you ever get to that point, just you just make sure to just take some time away from the screens, take some breaks, and I guarantee you, if it's not that next day where you're away from the screen, a couple days later you're gonna miss it, and then you're gonna be in a better mindset and a better place in your mind to actually sit down and trade.
So what you were
And
describing
if
was my
you,
year 3, that
yeah,
large just swings both directions. Yes, I was making a bunch of money. Yes, I was giving it back. That was my third year of trading, which was
oh
pretty
yeah,
much a break even year.
yep.
Even it was my turned my corner, and then I found trading in the zone.
Yeah, so if you pay yourself, like say you start with $1,000, you get, and then you almost, you 3 times your account, you pay yourself that thousand back. It's a risk-free account. So then if you do potentially blow it, but then on top of that, you should start still trying to withdraw more profits weekly, even if it's just $100 or $50, because that'll add up to groceries, and then that actually flips your mindset right away to a lot earlier. And I wish I did this a lot earlier,
Me too.
to just, being a profitable trader, and it'll save you a lot more in the down run. And it's a lot easier on your mental, because it's not funding 1,000, funding 1,000, funding 1,000, funding 1,000.
Right.
It's
You
funding
should,
1,000, taking 1,000, refunding that
oh
1,000,
my
right?
gosh.
So
Right, right.
while
You
you're
could
learning.
put it as starting from today, if you're one of those people that's continually funding an account. So, you blow it and then you come back and put more money in. You're like, oh, TOS, if I put it in $1,000 increments, it'll be ready for me tomorrow. If that's you, I want you to make the commitment to yourself that from today forward, that's all the money you're going to put in that account. You're going to prove that you can maintain that account well, and then you're going to pay yourself the profits out before you start trading. If it has to be Monday because you're looking for a cash settlement Monday morning before you start trading, and you're going to put that in a separate account. So you open up a separate savings account. So you're basically creating your own cushion. Because what happens is oh, I've got this extra money and now we size up. So if you continue to build that profit and put it in a cushion and prove to yourself that you can be profitable, keeping that set fixed amount, and we'll use $1,000 as a proverbial example, keeps you scared. And keeping you scared is what's going to keep you sane trading. And I hate to say that because I'm not super big on the whole, like, you should always be worried looking behind your shoulder. But honestly, from a success perspective, there's always somebody faster, smarter, prettier, whatever, better trader. Always. Like, there's not a time in anything you do that you're going to be the best, but we tend to fool ourselves with the, oh, look how much money I made. It's the rock star phenomenon. Woohoo, I'm a rock star. Life is good. But if you've pulled that money back and put it in a savings account, or paid off some bills, even better, maybe put half of it in a savings account and pay off credit cards, pay off whatever you need to pay off, put some money away for something you've been wanting to save up for out of that, it gives you something concrete. So the pay yourself, thank you for bringing that up. That is, oh my gosh. And it really should be every week. I know people that do it every day. That's one of the reasons I trade the account sizes that I trade, is I've had much larger accounts, and I'm like, I've got the money. I'm not worried about that. And it changed my mindset to go, all right, this is a quarter of the size of the account that I was normally trading. But it keeps me a little frosty. It keeps me a little more focused on, and I'm in reference to my main account, because I'll pay myself. Now I pay myself out once a month because this is not my only source of income. However, it is what I produce income with. It produces the majority of my income, but I don't have to pay my bills with it. So I only pay myself once a month. If you are working towards becoming a full-time trader that is supporting themselves with trading, you need to start creating habits along these lines. And Cruz, you can probably talk about your transition, because you did that, what was it, 2 years ago, a year ago, where you transitioned into, it was probably when you moved into full-time
yeah.
trading. So I would love to hear how you approach that.
I knew I wanted to do it, and I knew I needed to be a little bit patient when I first had that, that want. And I was like, okay, I could more than likely do this full time. And I probably could have about 2 years before, or probably about, I would say comfortably, probably a year. I don't want to be, over, yeah, but I would say like a year. And when I finally when I finally felt that, I guess I got to that point, that's whenever I actually went down to pretty much bare minimum for my day job. So I was doing pretty much trading full time, if you will, and then I had my day job as a little cushion, and I was still, of course, I didn't mind the day job because it really didn't take up a lot of hours per week, and it would pay
Yeah.
for some bills. But and then I had to get used to withdrawing that profit and not just, all right, that's my profit. That's not profit. That's my, that's rent.
That's my phone bill.
So,
That's my
and
grocery
yeah,
money. That's
there's
my truck
groceries, and then
payment.
you're like, holy like how much do I actually have? Like, how much do I actually need a month to just survive, right? Then you
Right.
start thinking, you're just like, okay, well, with that, like this is a, average month, and this is what I have left, right? Like this is an average month. And then I had to outweigh like those with bad months also, and then with good months, and then also just I had to really be more strict with it. And then I was pretty much, I got to the point where I was withdrawing bi-weekly a set amount,
Nice.
and if my account was fluctuating down, if I was still losing value over time, I knew that I wasn't doing something right, and I would kind of adjust like what needed if I needed to, just uh, just size up a little bit more, and just really just kind of got comfortable, and like the feel of just comfortable fixed income, if you will, off of this.
And so you
And
looked at it
once,
as a set dollar amount. You didn't look at it as taking the profits off. It was, I know I need this much money for my day-to-day living expenses
right,
and comfort and whatever,
exactly.
and taxes. You got to
Uh-huh.
make sure you're putting money
And
away for the
then,
taxes, you guys. Oh my gosh.
oh yeah,
Do
that
not want to have that
also was
conversation.
one of the
Whew.
first, the first years, whenever I was actually profitable, I actually got smoked from taxes because I didn't really understand it, I guess, until I was
Mm-hmm.
profitable, and I was like, oh hey, yeah, I'm profitable trading, now what? And then I was like, oh, I gotta get some profits.
Until you write
So
a check for 20
that,
grand and you're like, oh,
y-
ouch.
yep. And they love, yeah, the IRS loves traders, day traders. So,
Mm-hmm.
but yeah, overall, I had a set amount. Then I built my account to a nice cushion for that to be able to fluctuate, tens of thousands of dollars if needed. So, and then I finally got to the point where it was generating profitable income, and I had more than needed per, my set amount. And then I was like, okay, now we're good. And
It's
then
the
I also
snowball.
had this also dispersed money into other IRAs and other investing opportunities. But yeah.
So what were your position sizes before that out of your portfolio? And not your investment portfolio, but actually out of your trading account. So anytime I'm talking about port, my investment money
Mhm.
is completely separate. So from a trading
Oh yeah,
perspective.
exactly. Yeah, so I don't touch my IRAs. I actually, whatever extra is in there, like whatever extra I do make, I do eventually whenever we have opportunities, of course, to dip buy and whatever with stocks. Like I'm not buying anything right now, but um, I was actually sizing a little higher, like 3 to 5%
Okay.
whenever I first like started. Well, before I became full time, and then now it's like I'm basically doing, like I said, I'm sticking my neck out with the bare minimum needed to make living, and then more, right? And then it's only 1%, so I had to have a really terrible couple of months to
Yeah,
actually be
it would be
knocked out into the
months.
game. And yeah,
Yep.
I mean, more than even just terrible months, right? With my strict like 1%, three losses. I mean, if I did the math, it'd probably be. But it's I'm really just staying in the game, and then whenever I love the market, I'll size a little higher. But right now, it's just I don't love it, so I'm just gonna keep to what's needed and what's working.
And I used to do 1 to 1.5% when my account was larger, and decided
Hmm.
that I would rather redeploy that money. So I took 3/4 of it out and moved to 5%. So trading kind of similar position sizes, still with
Right.
managed risk,
With a
but
different,
allowed me to take
yes,
that money and do other things.
exactly.
And that's really important, is that you don't have all your money. And at that point I didn't, but I had a lot of it. Like I'd built it up enough that I
Hmm.
was like, oh, okay, imagine what I can do with that. Move that over there and do this and pay that off.
Yeah,
And that,
and
so that's a huge piece.
definitely. Definitely. I've been thinking of doing that, and I was planning on doing that for the new year, but I just, more than likely I'll have like a set amount again, but I'll definitely scale money into other things. I just had planned to move this money into other investments, but then I moved away.
Yeah.
So I now it's just been sitting ever since, just because I'm kind of, I don't know, like not superstitious, but it's like, if it ain't broke, don't fix it kind
Well,
of thing.
so
But I'll
did you
probably touch it eventually.
move it into a
And
Webull account to make your 5%?
yeah, yeah, oh yeah. Yeah, no, that's what I was
Yeah.
thinking too. So
Sit there and
yeah,
just let it make you some money while our interest rates are high.
exactly.
And
Hmm.
that's huge, is that all your money doesn't have to be deployed. You don't have to
Right.
have, if we want to go into the poker analogies, which professional high stakes poker is similar to a trader in a lot of ways, because it's law of averages, it's psychology, it's not just gambling. There's an actual skill behind the concept. And the idea is that we're not always with money on the table. You don't always have to be in a trade. You don't always have to have that money deployed somewhere. So what D Cruz is talking about is he's got money sitting on the sidelines that's just earning interest, that when the opportunity arises, he'll have something. He'll have,
Yeah. I'll
you know, whatever. Or
whenever we get some dip buyings or something like that. And also,
exactly.
to speak on that, I actually do keep getting increases on those higher yield savings
Yeah,
accounts just for having money in there. They're like, oh wow, he hasn't touched that.
right.
Here's an extra 0.1%. And I'm like, dang, I already
Yeah,
got three of those. I'm already up almost a 0.5%. And
right.
that's just insane. Like, and it's just, while we, take advantage of this while we can. And while I mean, what are they going to do? Lower it eventually? Like, no, that's probably never going to happen.
Well, and
So,
if
I
and
mean,
if
they
they do,
may stop
at that
raising it.
point,
Yeah.
maybe houses will be
Hmm.
cheaper and interest rates will be lower.
Yep.
And then now it's time for some real estate, some
Exactly.
invest some like commercial, or and commercial could be something like multifamily housing or something along those lines. But it's sitting there and it's ready. It's not scrambling trying to find the money once you find the right deal. So it's literally just
That's
chipping
what I'm
away,
waiting for. Yep.
putting it away for when the time is right. So all of mine comes off the top, all of my profit. So the 25K futures and the 10K options, all the profit every month gets dispersed to me and then goes to taxes. And I post about this. If you search trade recap month and the term month and a post from me, you'll be able to see those recaps. And it talks more about how I handle the end of the month. And I never size up. So I pretend like that's my base account. Is my base account. I pretend like that dollar amount is what I'm trading day 1 and day 30. So I don't go, oh, I took 10K to 15K. Now my position sizing is $750 instead of 500. I trade the same position size all month long because the money that I've already made is mine. I'm not I'm not putting it back in. And so if you use that philosophy, which where the term growth account came up, you could just pay yourself out those profits every day. You could wake up the next morning, you've got profits
Oh
that
yeah,
say you made $700 yesterday. First thing you
draw it.
do when you open your broker is transfer out that 700, and now you're starting over. And you could use the $1,000 or the $10,000 or the 100,000, whatever your base account is, so that you can maintain that mindset. And I actually had to do that for a while, where I would just get the money out of my account because I was that person that continually just kept funding and funding and funding. And it'll make you crazy for sure.
Oh yeah,
So pulling it
makes
out.
you really question if you really want to do this still, because you're still learning.
Yep.
But then you're also just you're not making anything, and you're also wasting. Like not wasting, but it just seems like that whenever you're learning
Yeah.
in a way. And it's just like, all right, but if I just, if I even just withdrew half of that and just made it even, ways like, even twice as easier, achievable to,
Exactly.
refund. It's just, just set yourself up for the future, you guys. Like, you really have to set your mentality on it's not going to work like yesterday or today. Like, it may not work tomorrow, but like, you will get it like eventually, right? It's just, you just got to really be patient with it and think longevity. And then once it does start, once it does happen, it's going to happen. And it's just, you really have to, the name of the game is keeping yourself in another trade. There's always a better trade. Just by, even just by saying that, it's just you're always going to learn something from a trade. So, each trade you typically get better just because you're gaining experience, and you're also learning something from either loss or win. So you just got to keep yourself in, and just keep you just stay in for another trade, stay in the game for another trade.
My learning didn't happen until I started journaling, until I started writing it down. And that applies for
Yep.
trading, but it also applies for weight loss. When I lost my weight, I
That's where
couldn't
discipline comes in.
identify that I was eating 3 servings of nuts because I wasn't tracking it. I was like, oh, nuts are healthy for you, but it was still too many calories. Same thing. Oh, trading is going to make me money. I better go trade. Sitting on your hands makes you money on the days that you're not seeing things well. It's the same idea. It's just because it's healthy, just because it's something that can be profitable, doesn't mean excess is a necessary thing. So transitioning to full time, I have a couple of rules, and I will say that most people should not be in a hurry to do that because it is not for the faint of heart by any means.
Absolutely not.
My general recommendation, and we can call it rules, whatever. One is that you have gotten to a point where I talked about that challenge of no longer refunding your account. So you're practicing the self-control and the willpower to put money in one time and then withdraw the profits. And if you're steadily building up a savings account with those profits, taking half of it out to pay some bills, keeping the other half, you can eventually pull that money back in once you've proven to yourself. And that's what I had to do because I kept putting larger amounts. And finally, I'm like, obviously, I'm not managing larger amounts well. Let me prove that I can manage a smaller amount. Prove to myself, right? Don't have anybody to prove it to. Prove to myself that I can have good discipline and do what I need to do so that I never have to put money in an account ever again, ever. The only direction that money moves is out of my trading accounts into my bank account. That's it. So that would be my suggestion, is you need to see that you have developed the ability to be able to do that. Here's ES at new high of the day again. Wow, good times. That you can do that consistently over an extended period. So my suggestion is 12 months of consistently profitable. So you've been able to do it through varying types of market conditions. I would like to see 12 months of all of your living expenses saved up. That would be ideal. If you don't have that, a minimum, I would say 3 to 6 months. 3 would make me very worried about you, but 3 is better than 0. And like, I'm just going to jump off and build my wings on the way down. There's some pretty heavy performance anxiety involved in that. So let's call it 6
Performance
months.
anxiety too is
Oh, it will
something.
wreck you.
Yeah,
You will never
'cause
trade well with performance anxiety. Nope.
yeah.
So,
Prime example,
oh,
actually, I
yeah,
kind of, and you know, you got to kind of, you really have to keep your mind in check too with everything with that, because like for example, right now I'm not having the best month, and you know it's already like 10th, right? So the half the month's already gone by, and I'm basically, you know, slightly red, if not break even. I have to go look at the portfolios, but and it's just kind of like, all right, well, I just got to reset. It's like, you know, you can't get in a bad spot here, because then you can start really rolling that ball down. But that's
right,
also why, you know, it's like I said, I'd size 1%, like, and it would take a really bad couple of months, like if not a
right.
year, to, you know, take me out. But yeah, it's just, you got to reset, and you just got to try to stay. And if you're not staying ahead, you got to, you know, climb back, and it's just, you know, one trade at a time. You got to keep that mentality. It's really important.
Exactly. And our goal transitioning into full-time trading is to not be like, oh, I'm a trader, so I have my freedom. That is such a fallacy. You're still doing something. You're exchanging your time for the its cost opportunity, your time for the potential to be in front of a trade with all your ducks in a row. I call it luck, but for me, the definition of luck is preparation, opportunity, and action. So, in order for those to come together, even if you're prepared and you have the opportunity and didn't take the action because you weren't in front of the screen or whatever, like me at lunch, finally went to get some clam chowder from the kitchen, and here we go, popping over the 2022 high of the year. I couldn't take the action because I wasn't in front of the screens. You can't be tied to the screens the whole day, but if it's going to be your full-time job, make sure that you are treating it as such. Even if you make your money in 2-3 hours a day worth of while the markets are live, you still probably have spent some more time, or at least I do, preparing, watching, calculating, all that fun stuff. And you have to still think of it as a job. It's not, oh, I'm free from my 9 to 5 now, and I can just go throw some money in the market because it's a PPP, piss poor performance comes from piss poor preparation. The 2 3 P's. So not being prepared, waking up late, all that stuff. If you are trading for a living and you didn't sleep well, or whatever, you just wake up and you're off, you have to be able to say to yourself, maybe I'm not trading for this morning. Maybe I'm just going to go take a walk, or,
Oh yeah,
you know,
that
if
is
it's
critical.
not in front of the screens, and we are on voice all the time, so we're in front of the screens, but you'll hear us say, hey, you know, I had a little
I'll
late
have my
start this
broker
morning,
open or
or
something. Yep.
didn't get breakfast, or
Mhm.
whatever. Just woke up on the
Oh
wrong
yeah.
side of the bed and I'm just not going to trade today because I'm not feeling it. You have to get really good at finding for you what that balance is, or you won't be around next year to not have all your money on the table playing every single hand.
Exactly. I'm getting DMs actually, and people are asking how I'm actually red, but no, I actually mistaken. It's just my futures accounts, which are actually Apex Tradeovate accounts, are red, so I'm actually, yeah, unaffected by those. It just feels like it because I
It
have
still has
lost
that
a
feeling.
few
Yeah.
trades, but yeah, no, actually, no, my options portfolio is actually looking not too bad. I haven't. I'm gonna be trading that a little bit more actually. Now that I'm looking at it, I'm like, okay, I'm a little, you know, behind schedule here, but we are, yeah, no, Amazon, Google, QQQ, we've all been producing pretty well this year. Apple's been okay, so okay,
Yeah. And
never
that
mind.
that takes us back into the concept of making sure that you're journaling and reviewing your trades. You're not going
Yep,
to know what you need to focus on, what you need to redirect without doing that. Then it's just flying by the seat of your pants and probably will not end well. I hate to say that, but most likely for most people, that is not going to be your way. So I am going to start using the Trader Forge program, which is part of the membership at Bull Trades. And I actually have my Windows computer that I brought home from the gym. And so I'm going to download it on that. I know Shadow has some Mac downloads, but I, for the life of me, cannot get them to work on any of my 3 Macs. So it's probably operational error, but I'm just going to dedicate that to running my Webull, the time and sales tick by tick, and my Trader Forge program, and start using that because it is an amazing program and it's definitely been underutilized by me. If you don't know what it is, you can just go into Market Talk and type in hashtag Forge. Actually, you could probably, yeah, if you type in hashtag Forge, it'll pull up the Trader Forge, it'll tag it and hit enter. And I'll go ahead and do that in Market Talk once we wrap up this session. But Shadow actually developed that for us to use. So it's not something that, like outside, as he came in, when he became a trusted trader, he had already started to develop this program. And I remember he initially approached me when he was listening to D Cruz on his Twitch stream while he was still running that. And when he first came into the community, he said, all right, I've taken this program that I've developed and I've taken all your trades over the last, I think it was like 3 months. I'd have to go back and look, but it was an extended period. And he said, I'm like tweaking, if the stop losses were a little less, or, if position sizing was more or less, what that looks like. And he said, oh my gosh, like what? That's impressive. And the idea is that you can play with those numbers. And that's when he really came into the Bull Trade staff, and we were like, dang, this program, what the heck? So it is part of your membership. It is of huge value, huge. And I think we're working towards having developers build it as to something that can actually go into our dashboard as well. But I think that is a very long time out. So in the meantime, going through he has a series of videos that teach how to use it and go a little bit more into depth, or you could just grab the spreadsheets and just jump right in if you're that type of person. That's definitely me. And then I'll go back and be like, wait, I don't understand this, and watch the video. Make sure you're utilizing your resources in this server. There's a huge amount of resources, and that's one that I think many people do not know is there, or just don't understand what the huge amount of value there is there. So any questions, you guys? So I'm going to hop over into Market Talk now and see if anybody has, I don't know if you've been in there, D Cruz, to see.
I've been looking over everybody's, I'm trying to figure out, do we have a bed speaking soon? Oh yeah, Williams, huh?
That's tomorrow, right? Or is that today?
Says today.
Oh yeah.
Yeah, no, I'm not seeing any questions
1:15. Yeah. So yeah, Williams is speaking right now. So yeah, I don't see any questions. So I know that it's frustrating to have days that aren't all, it's almost like when the market, went up for what, 9 weeks straight. When it did sell, everybody was surprised, like, wait, that happens? You almost get too used to it. And it's the same idea with your accounts as you continually see them grow month after month, or you could even go day after day, week after week, month after month, year over year. And then hopefully you don't see a whole year of drawdowns. Hopefully you don't even see a whole month of drawdowns. But it happens to some traders. So you have to get the mind perspective of how you get things in place so that you're not finding yourself in that position shocked. Like, wait, what happened? Hold on, how am I going to explain this? So if you are frustrated at all, and I'm frustrated because I am not seeing the market well, but I'm not frustrated from the losses. I guess that's the best way to describe it. Like I'm thinking, what was I thinking? And so lots of journaling, lots of reflection on that definitely helps me reset each time. But if you are not at that point where you can just do that, where it's just part of it, and for most people, it takes many, many years to be able to get to that point. And I'm talking greater than 6 or 7, most likely. Then you need to dig into the psychology channel that we have in Bull Trades University. Start with trading in the zone. So my year 3, at the end of my year 3, where it wasn't a losing year, it was pretty much a break even, it was a little bit of profit. And then I found trading in the zone. that Trading in the Zone, there's an audiobook that's the very first pinned post, was what did it for me. Even after I had found that, you know, I was still taking some drawdowns, but I was not then at that point a losing trader. And then that was the coin flip. That was the boom. Okay. All of a sudden, I had an awareness of what I was doing because of the way that you talk to yourself, because of the way you think about things, that changed everything. So some heavy recommendations in there, but there's a lot of content if you have not dug into it. I do post these recordings as well in there, so those are the more recent posts, but make sure you're going through all the content and maybe read everything and then go back and start listening to Trading in the Zone from that very beginning and just work your way through it. So I actually added content in the order that, especially at the beginning, those first, well, most of the pinned posts are really curated around kind of stair-stepping you through the transition from being a losing trader to a break-even trader to a profitable trader to a successful trader. And I'm looking for posts in the Trading Accountability channel. We put that out there for you guys so that you can be posting not just screen captures. So there's the gains pictures. Okay, that's nice, but your trading accountability, what did you do well? What did you not do well? What's your plans moving forward for what you're going to change around what you're doing is what that's for. So use it and we will respond to it. If there's posts in there, we're in there. I'm in there at least once a day, if not a couple times a day. But more importantly, you being in there, once you put it in writing, once you put it out there and say, this is what I'm not doing well, it does something where your brain goes, I don't want to have to post that again. And you have to take that personal accountability to make yourself do it. That's the whole trading accountability, is you're your own risk manager. By and large, that's what retail is. You're your trader and your risk manager. And that is a hard set of shoes to fill. So thanks for hanging out with us, guys. Again, my apologies for having to reschedule this to a little bit later, but I think it worked out for good timing. Definitely got to be on a little bit longer. And Cruz, as always,
thanks for hanging out. Right,
good to catch up with you. And I know we see each other trading, but I think this is just a good different type of formatted environment. So I always enjoy these.
Oh yeah, absolutely, I agree. And you know, thank you. And until next Wednesday, but well, until tomorrow.
Until tomorrow morning, exactly. You know, all right. Well, enjoy your afternoon.
Over matter.
Yeah, perfect. Yep. Okay, and we'll see you guys. I'm probably done trading for the day. I'll probably go look at charts a little bit deeper now that we're getting off, but I'll still be around on voice.
Have a good afternoon, you guys. And yeah, we'll see you soon, Peter.